market update for the last quarter of 2017. Vietnam's economy to see a robust growth. As of end of 2017, Vietnam's GDP reached the highest level at more than 6.8%, outstripping the government's target of 6.7% and going much higher than the figures over the 2011 and 2016 period. According to the General Statistics Office, this result was obtained due to the improvement of almost all economic sectors. Of these, the industrial and construction sector witnessed appreciable growth of 8% year-over-year, followed by the service sector and the agro, forestry, fisheries sector with a further boost of 7.4% and 2.9% year-over-year respectively. Taking a look ahead at 2018, Vietnam has one of the fastest growing economies in the region, with a positive growth rate of 6.5% to 6.7%. Moving on to the office sectors of Ho Chi Minh City, there's an increase in supply. In the fourth quarter of 2017, Deutsche House Ho Chi Minh City officially came on stream, adding 25,303 square meters NFA to the market. Total stock at end of the fourth quarter of 2017 was approximately 1.9 million square meters, an increase of 158,889 square meters NFA, comparing to the fourth quarter of 2016, coming from 2 Grade A buildings, 3 Grade B buildings, and 5 Grade C buildings. There's healthy demand across all segments. Grade A subsegment continued to record impressive net absorption in the fourth quarter of 2017, mostly coming from 2 new completions, Saigon Center Phase 2 and Deutsche House Ho Chi Minh City. In spite of new supply coming onto the market over the year, the market-wide occupancy rate was still at a high level thanks to healthy demand and a result of positive economic prospect. On to the outlook for 2018. In 2018, while there will be no new Grade A building completed, the market is expected to welcome 1 Grade B building, which is Etown Central, and 4 Grade C buildings, providing an additional 50,000 square meters NFA to the market. Rents will keep increasing. In 2018, average rents will grow moderately in line with increasing demand and higher rent at new buildings. Inquiries for new setup is likely increasing, while relocation and expansion will continuously drive market demand.
Moving on to the retail sector of Ho Chi Minh City, there were 3 new projects completed in a non-CBD submarket as of the fourth quarter of 2017, adding an extra 75,000 square meters of retail space to the current city stock, up 11.5% quarter-on-quarter and 19.7% year-on-year. The convenience store, a mini-mart supply, continued to expand strongly with well-known brands such as Bách Hóa Xanh, Vinmart Plus, Ministop, 7-Eleven, and many more. As of the fourth quarter of 2017, with nearly 45% year-on-year growth in number of stores, local brands dominated more than 60% of the total supply. Around 48,500 square meter space was taken up in the quarter, mostly recorded in a non-CBD area, thanks to a notable supply, active leasing activity, and improved consumer spending across the city. More than 250,000 square meters in the retail supply pipeline, mostly located in the non-CBD districts, with an average project scale of 25,000 to 35,000 square meters, is scheduled to be launched in 2018. International retailers will most likely continue jumping into the market driven by the healthy long-term prospects of the market. These suburban rents in new projects are expected to increase slightly. In terms of leasing demand, F&B chains continue to stay mostly active thanks to the developing trend in dining out.
Move on with residential markets. Ho Chi Minh City residential mid-end new launch up considerably. Apartments new launch in Q4 2017 total 50,000 units, up 29% quarter-on-quarter and 71.2% year-on-year. Of this, mid-end segment accounted for 45% of total launch. while villa and townhouse new supply reached over 1,800 units, up 30% quarter-on-quarter. Most townhouses were at 135,000, up to 300,000 US dollar per unit. Demand at good levels. For apartments, sales reached over 16,000 units, 58% price in US dollar from 1,000 to 2,000 per square meter rent, and 35.2% to be handed over by end of 2018. Villas, townhouse, sell total over 2,000 units, 2.7 times of Q4 2016 figure, the highest level since 2000 thanks to the strong market momentum recently. Higher supply of low-end apartments. Until end of 2018, new launch of apartments may reach nearly 30,000 units, dominated by low-price sector. New launch of villas and townhouse in 2018 are expected to reach 3,500 units by year-end. Good sales rate forecast, especially in low-end segment. The low-price sector targeting owner-occupier demand will likely drive future sales, supported by better infrastructure development. The sale rate is likely to remain in positive territory towards end of 2018, especially in the villa and townhouse markets.
To continue, we will move to the industrial sector. The southern industrial supply in the end of second half 2017 was relatively constant compared to that in the first 6 months, with a total leasable and land area of about 24,000 hectares. Of the total, Bình and Dong Nai remain the leading markets, accounting for nearly 60% given their better accessibility to transportation infrastructure. Demand remains robust. The vacancy rate in the operating industrial parks stood at approximately 25% at the end of 2017, down 180 basis points from the Q4 2016, driven by healthy demand. A healthy performance was observed in the existing ready-built factories, which recorded more than 85% occupancy rate, given the strong demand and limited leasable stock. Industrial market outlook. A large volume of new supply awaits. More than 1,300 hectares of supply in the pipeline is expected to enter the southern market over the next year, mostly coming from extended phases of existing projects. Demand to continue stronger for industrial properties. Occupancy and rental growth rates are both expected to go higher due to active occupier demand and positive economic prospects. Demand for good quality ready-built space and related services in industrial parks will likely increase strongly. Thank you for watching, and we wish you a great working week ahead.